My name is Ennèl van Eeden, and I am really proud to present today PwC's 19th edition of the Global Entertainment and Media Outlook. In the next 10 minutes, I'll run you through quickly what the Outlook is, what's new this year. I'll share some of the highlights that we see globally and for the US market, and then I will wrap it up with what it all means. Oh, sorry, I'm already lost. So the Outlook. Every year, our teams of researchers and analysts around the world get together, taking a really deep dive into this industry. It starts with the data. We cover data on consumer spend and advertising revenue. We cover 5-year historic data and 5-year forecast information, covering 53 countries around the world, divided over 15 industry segments within the industry. But that's not only the data. The data is only the start. The real magic happens when our authors get together, bundling their insights gained from working with clients all over the world on a daily basis, and turn this raw information into true intelligence and perspectives. And that is what forms the Outlook that we are presenting today. It's very difficult to see. Yeah? All right. So we have 15 segments within the E&M Outlook as we defined them, and they can really be grouped into 5 categories, centered around the activity that is depicted by it. Access, watching, reading, playing, and listening. There are a few changes to the Outlook this year. First of all, we've combined esports and video games into one segment, and we've enriched our esports data set with spending on media rights, really illustrating the vast development impacting that esports market. Secondly, in the listening category, we have combined music and radio now into one segment, and that's really illustrating how the audio entertainment industry is increasingly interconnected. And we've added podcasts to the data set. Our podcast information covers only 20 markets. We started with 20 markets, and it spans consumer spend as well as ad spend on podcasts. We've made a few tweaks to the names in the Outlook. Out-of-home advertising is now simply called out-of-home, and internet video is now called OTT. The underlying data did not change at all. And lastly, we have excluded Venezuela from our geographies covered. With the political and economical uncertainty in that market, we noted that it was increasingly difficult to come up with really reliable information on the media spend, and therefore we decided to no longer cover Venezuela in the Outlook. So here we go. As Mark mentioned, there's really 3 imperatives shaping or impacting each and every company in this industry today, and that is convergence, connecting with the consumer, and the need to build trust. Convergence is certainly not new to this industry. However, we are dealing with a new wave of convergence. We chose to call it Convergence 3.0. It's really different this time. It's brought on by different capabilities, and the stakes are so much higher. It's shaping a new evolvement of a new group of super competitors on the one hand, and on the other hand, companies are looking to build relevance at scale. We used to see very clear borders between technology, telecommunications, and the media industries. Those borders are really diminishing. Large platform and distribution companies are vertically integrating within TMT, and we see established media giants integrating horizontally across TMT. Revenue models are being revised and re-envisioned. It's all about building the connection with the end consumer and then finding out how to best monetize that. We're also living in a world where trust in many industries is at an all-time low. This will really require companies to be proactive in thinking about how they deal with trust Regulators are increasingly targeting media businesses' use of data, and being able to build and sustain consumer trust is becoming a vital differentiator for many businesses. So now, the outlook wouldn't be the outlook without some numbers. Globally, we expect to see an increase of 4.4% on a compounded annual basis over the next 5 years through 2022. Well, one may think about, wait a minute, this industry is massively disrupted. How come, this is a very steady growth. It's pretty much in line with the past 5 years. It's pretty much in line with what we have predicted. What we're seeing as the industry is really transforming before our eyes, and this industry is able to, because it is transforming itself, to really hold on to historic growth patterns. At the same time, the outlook and this data is made up of a countless number of mini stories spread across many different territories and across the various industry segments. So looking at the segments, we see some stark differences in terms of expected growth. The next 5 years, the digitally driven segments will grow faster than non-digital segments, and virtual reality is really leading the way with a mind-blowing 40% annual growth over the next 5 years. It should be noted that virtual reality is really starting off a very small revenue base. OTT will continue its double-digit spend over the next 5 years. And shrinking markets are magazines and newspapers. But it's nice to point out that if you look at the newspaper markets, newspaper publishing, which will not be growing, if you look at a market as India, there's a very different story to tell there, because the newspaper market is actually growing there. It's booming business, and it will add $1 billion of revenue over the next 5 years in the Indian market. Then if we look at what segments are contributing the most revenue to the industry over the next 5 years, internet access and internet advertising are really heading the way. Combined, they will make up 2/3 of the total growth in the revenue in the industry over the next 5 years. And if you take a deeper dive into the internet access, 86% of that growth will come from increased mobile connections worldwide. And if you look at that growth in mobile access, it's 4 markets making up half of that. It's the US, China, South Korea, and Japan. So you see here a divergence across territories. What is very interesting to point out is TV advertising. TV advertising will continue to add growth. It will add $24 billion in worldwide revenues over the next 5 years. And this really illustrates the medium's continued importance, even though we are in a digital age. So, if we then take a look at what's happening in the US, nice bubbles on the chart, but what we see today is that consumer spend is making up almost half of the E&M revenue share, and that relative share will decrease over the next 5 years to a smaller share. And that is caused because we spend more and more on access to internet and data. And the low growth in consumer spend on entertainment media is well documented. We all know that content is free everywhere on the internet. We have the persistent problem of piracy. Social media is on the lure. So that is really what we see back in the numbers. If you look at the US market, an interesting tipping point is approaching. By 2020, there will be more spent in the US on digital entertainment and media products and services than non-digital. This is an important tipping point for the industry. And underlying this is the uptake that we'll also see in the US market in mobile subscriptions, but also fueled by 5G that's entering and really enabling this explosive use of the internet for consuming media. The US mobile market is mature. One may look at it and say, well, this is a very mature market, but even so, we expect more than 20 million new mobile subscribers to be added to the US market in the next 5 years. And if you look at the upgrade to high-speed connections, we expect 100 million high-speed connections to be added in the US market over the next 5 years. And that is really because 5G is entering the market. Globally, we're talking about over 2 billion new connections, which is growing explosively out of Asia and emerging markets. This is showing a different way of showing, so where is the most of the revenue spent? Consumers spend on access and on watching media. That's where we spend the most money. Access will continue to grow, the money we spend on access, but on watching is stable. But the real growth is here at the smaller bubbles, play and listen. There we see 8% growth on play. And to put it into a bit of perspective, the video games and esports and virtual reality combined will add another $11 billion to the US industry over the next 5 years. So that's really how you translate those bubbles into numbers. Another important tipping point approaching is at the end of our forecast period by 2022. There we will see the advertising spending on digital platforms will overtake ad spend on non-digital platforms. This is really following consumers increasing time spent online, on screens, and the advertisers are following. The US market will continue to be the largest internet advertising market in the world. In 2017, the US internet advertising was about an $88 billion industry, and that will continue to grow. Today, it makes up 40% of the global internet advertising market, the US alone, which is huge. We see China really growing much faster, but the US will also continue to grow at 7.7%, turning into an industry of about 127 million by the end of the forecast period. Enabling this growth in internet advertising is the emergence of new technologies and devices. Think about artificial intelligence, chatbots based on AI, augmented reality and virtual reality, and also the increased penetration of voice-based smart home devices. That's going to continue to shape this industry as it moves forward. Later in the day, we'll talk a little bit more about that. And this is a short piece on, or a little bit on the data consumption. The US continues to be the biggest consumer of data worldwide. By 2022, 86% of all the data we consume will be video-based. And 5G really enables the speed and encourages consumers to use more online capabilities for video and video gaming. So this is continuing this acceleration in the coming years. And then finally, to sum it all up, every company in the industry today really need to re-envision how they see themselves. They need to rethink what is their basis for competition. Are they going towards becoming a super competitor, or are you going to build relevance at scale? And that may sound very easy, building relevance at scale, but it really requires a powerhouse of quality and engagement. It requires content creators to be as passionate about their stories, what they're making, as the consumers themselves. It's about finding and keeping engagement with those high value but really hard to reach audiences, and sustaining that relationship over an extended period of time. Companies need to rethink revenue models. I think companies need to allow themselves room for invest and experiment to find more and different ways to connect with consumers, and then how to monetize those connections. Strong content creation, but also content curation capabilities is a must. Content creation is all about really understand what the consumer needs, and the curation is an increasing important factor in terms of contextual advertising along those lines. And finally, trust again. Simply sticking to what's legally required is no longer considered to be enough. There is uncertainty coming out of Washington in terms of what policy changes will come our way the coming years, and companies are expected to be proactive in embracing upcoming regulation as they rethink their strategies going forward. So what we're seeing is that the industry is changing, it's changing fast. There is no company in this industry that can afford to stand still. Standing still is really not an option.